All right, so we're diving deep today into British American Tobacco, specifically their 2024 annual report. And, you know, I know a lot of you out there probably don't have time to dig through all those pages.
Hundreds and hundreds.
Yeah, exactly. It can be a
Yeah.
little overwhelming. So we're going to do the heavy lifting for you.
Exactly.
So consider this your fast track to understanding kind of the core of BT's business. How are they doing financially and what are their plans for the future? We're going to pull all this directly from the official report, so no speculation here.
No, just straight from the source.
And our goal today, like always, is to distill those key insights, right? What are the really important things you need to know about their different business segments, their financial performance, and how they plan to create value for their shareholders?
Exactly. And you've provided us with this really detailed document, and it's fascinating to see just how comprehensive of a view they give of their operations. So our role is to unpack that, to kind of connect the dots between the strategic ambitions that they're outlining and then what we actually see in the results. And it's not just about the numbers themselves for 2024. It's about understanding what that means for the direction the company is heading in and for those who are invested in it.
Okay. Yeah, and I think a good place to start is with their business segments, right? Just to kind of understand how they're structured. And one thing that jumped out at me right away in the report was this emphasis on quality growth as an initiative.
Mhm.
So can you unpack that a little bit? What does that actually mean in terms of how they're running their business?
Yeah, quality growth, it's their way of saying that they're taking a more balanced approach. And what I mean by that is it's not just about, driving the top line revenue growth. It's also about focusing on profitability, making sure that, the bottom line is healthy as well.
So it's not growth at all costs.
Exactly. It's sustainable growth, it's
Mhm.
about quality over quantity, and they're really emphasizing the importance of, their brands, right? Their core brands, strengthening those, and then also driving innovation across their product lines.
Okay. And then another theme that really stood out was this whole sustainable future, building a smokeless world commitment. And I was really curious how that kind of plays out across their different business segments.
Yeah, so that's really interesting because that commitment to building a smokeless world, that's like a fundamental principle that guides all their activities, but you see it most directly reflected in their focus on what they call new categories. And those are things like vapor products, heated products, and what they call modern oral. And the whole idea there is to, reduce the health impact of their business by getting smokers to switch to potentially less harmful alternatives. And this isn't just a kind of a corporate social responsibility thing. It's increasingly becoming a core part of their innovation and their growth strategy.
Yeah, that makes sense. Okay, well, let's dig into the performance of these different business segments and see how they actually did in 2024 based on this report. So starting with vapor, they reported 1,721 million pounds in revenue. But there's actually a few different numbers here. So can you help us kind of break that down and understand what these figures really tell us?
Absolutely. So that 1,721 million pounds, that's the actual revenue that they recorded. That's what they brought in. But when you compare that to the previous year, it actually represents a 5.1% decrease.
Yeah, I saw that.
But to really get a sense of the underlying business momentum, what they also provide is what they call organic growth at constant rates of exchange.
Okay.
So what this does is it adjusts for things like currency fluctuations, right? Because the exchange rates can go up and down. That can affect revenue. And it also adjusts for any changes in their business due to acquisitions or disposals. So they might have sold off a part of their business or bought another company, and that can affect the numbers.
Right, right.
So when you look at the organic decrease at constant rates, it was actually 2.5%. So it's still a decrease, but it's smaller.
So it's not quite as bad as it looks at first glance.
Exactly. And they also mentioned another figure reported at constant currency, and that's 1,765 million pounds. And what that does is it basically isolates just the impact of exchange rates. So if you take out the effect of buying and selling businesses, that's the number you get. So the headline number shows a decline, right?
Yeah.
But this smaller organic decrease suggests that the core vapor business might be actually kind of stabilizing a little bit,
Yeah, that's interesting.
despite some currency headwinds.
Okay.
So for you, the listener, the takeaway here is that focusing on that organic figure, that often gives you a clearer picture of how the segment is really performing operationally.
Okay. All right. So that's vapor. Now let's move on to heated products, or as they call it, HP. And revenue here was 443 million pounds. And that's a pretty steep drop of 12.2%. And volumes were also down significantly by 24.6%. So what's the story behind these declines?
Yeah, and that's a really interesting one because if you dig into the report, What they specifically mention is the sale of their operations in Russia and Belarus.
Okay.
So they divested from those markets, and that had a really significant negative impact on the HP segment's performance, and it's actually kind of masking some positive developments that they've had in other European markets. So for example, they mentioned, growth in Germany and Poland and Italy.
Oh, interesting.
But despite those pockets of growth, their global HP volume share remained flat at 17.1%. So you can see that the impact of exiting Russia and Belarus was really substantial.
Yeah. Yeah.
It kind of outweighed the positive stuff happening elsewhere. So the headline decline doesn't really tell the whole story.
Right.
Divestments played a major role there.
Okay, so it's important to look at the context and not just the raw numbers.
Yeah.
All right, well, let's move on then to modern oral. And this one looks like a real bright spot. Revenue surged by 40.3% to 790 million pounds, driven by a huge jump in volume of 50.2%. So
Yeah.
what's fueling this impressive growth?
Yeah. So they highlight their strong market position in the report, and they talk about how they hold leadership in 21 modern oral markets.
Wow, that's a lot.
It is, yeah. And this really speaks to the success of their brands like Velo, particularly in markets that are well established like Sweden.
Okay.
And then what's also really interesting is they expanded into new markets during 2023. So they entered Finland, they went into Italy and France, and that really boosted their volume and their revenue.
Okay.
And while their volume share in some key Africa and Middle East markets dipped a little bit, the overall trend for modern oral is very clearly one of rapid expansion.
Yeah, it seems like it.
So as a listener, you know this segment's performance that really indicates that this is likely a key area of future growth for BAT.
Okay. All right. That's good to know. Now, let's shift gears a little bit and talk about the more established parts of their business, starting with traditional oral. They generated 1092 million pounds in revenue, which is actually a decrease of 6%. And similar to vapor, we see that there's this distinction between reported and organic figures, right?
Right, exactly. And the organic decline at constant rates was 3.4%, and then the reported at constant currency figure was 1,123 million pounds. So what this tells us is that while the overall traditional oral segment is contracting, the underlying performance when you adjust for those currency fluctuations is actually a little bit better than the initial reported numbers might suggest.
Okay, so again, it's important to kind of peel back the layers a little bit.
Exactly.
And of course, we can't ignore combustibles, which still represents a significant chunk of their revenue at 2,685 million pounds.
Yeah.
And that's a decrease of 7.5%. However, I noticed that the report highlights a favorable price mix. So can you explain what that means and why it's important?
Yeah, that's a really crucial point.
Yeah.
So even though the volume of cigarettes and other combustibles that they sold decreased by 10.2%, largely due to that Russia and Belarus sale, they actually managed to increase the revenue they generate per unit sold.
Oh, interesting.
So they essentially charged more per pack of cigarettes, and they also shifted their product mix a little bit towards higher value products.
Okay.
So this favorable price mix of plus 5.7%, that helped to partially compensate for that lower sales volume. And it's interesting because the performance actually varied geographically. So they saw lower volumes in Canada, but they had higher volumes in markets like Turkey, Brazil, and Mexico.
Yeah.
And their cigarette value share remained pretty stable, and their volume share even increased a little bit in 2024. So the organic growth at constant currency for combustibles was actually plus more 1%.
Wow.
Which is kind of surprising, right? Because you think about the global trend of declining smoking rates.
Yeah.
This segment is actually showing some resilience, and the reported at constant currency figure was 748 million pounds. So yeah, fewer units were sold, but they made more money per unit.
That's fascinating. Okay. And then finally, we have this other segment with revenue of 658 million pounds, a slight reported decrease, but with strong organic growth.
Exactly. Yeah, the organic growth at constant rates was 10.1%, which is really strong. And the reported at constant currency figure was 729 million pounds. So this suggests that while it's a smaller part of their overall business, this other segment is actually demonstrating some pretty good underlying momentum.
Okay. All right. Well, that gives us a good overview of the different segments. So now let's kind of zoom out a little bit and talk about, given all this, what are the main growth strategies and initiatives that Gady is focusing on?
Yeah, so their primary focus strategically is very clearly on expanding those new categories that we talked about. So the vapor, the heated products, the modern oral, and that's really all part of their ambition to create the smokeless future that they talk about. And they're putting their money where their mouth is. They're investing heavily in research and development to innovate new products and also to generate the scientific evidence to support, the harm reduction potential of these products.
Makes sense.
They're also strategically expanding their presence in the modern oral category geographically. So they're trying to kind of replicate the success they've had in certain markets and bring that to more markets worldwide.
Okay.
And responsible marketing practices are also a big focus. So, they want to encourage adult smokers to switch, but obviously they want to prevent underage use. So they're being very careful about how they market these products.
Yeah, of course.
And then beyond those specific product categories, they're also focused on what they call the dynamic business pillar. And this includes things like, making their operations more efficient, streamlining things, and importantly, as we'll discuss later, returning capital to shareholders.
Sure.
And then sustainability is also something that's really deeply embedded in their strategy. They talk about things like, tobacco harm reduction, of course, but also climate change, resource management, community engagement. Those are all things that are kind of baked into their overall approach.
Okay, so it seems like they've got a pretty comprehensive plan in place. But of course, with any business, there are always challenges. So what are some of the major challenges that BS anticipates moving forward as they've outlined in this report?
Yeah, there are definitely some headwinds. One of the concerns is the decline in those heated products volumes, despite the fact that they have seen some regional successes.
Yeah.
That's something they need to keep an eye on. And while that price mix strategy that we talked about is currently supporting the combustible segment, the fundamental long-term trend of declining smoking rates globally, that's still a challenge for them.
Of course.
And then perhaps one of the most significant and unpredictable factors is the regulatory landscape. Governments are constantly changing their policies around these types of products, and there's always the potential for bans or restrictions on marketing or sales of these new categories, and that could directly impact their growth plans.
Yeah, that makes sense.
And then the extent to which regulators kind of embrace this whole concept of tobacco harm reduction, that's going to be really crucial for their future.
Absolutely.
And then, of course, they face supply chain complexities, like many businesses, particularly for these newer product categories, and they have to navigate the ongoing impacts of, geopolitical instability, as we saw with the Russia and Belarus divestments.
That's a good point.
And then finally, like any global corporation, they need to adapt to the risks and opportunities presented by things like climate change and the transition to a more circular economy. So they've got a lot on their plate.
They do. Okay, well, let's shift gears now and talk about the financial health of the company. The report shows a pretty significant turnaround in their profit for the year.
Yeah.
So in 2024, they reported a profit of 381 million pounds. But this is in stark contrast to the 1,489 million pound loss that they reported in 2023. So what explains this dramatic shift?
Yeah, so the main reason for that huge swing is that in 2023, they took this massive impairment charge of 27.3 billion pounds.
Wow, that's a lot.
It's huge, and that was related to their U.S. goodwill and some of their traditional cigarette brands. And what an impairment means is it's essentially a write-down in the value of an asset on their balance sheet.
Okay.
So it's a big accounting adjustment, and it was a one-time thing, but it really hit their bottom line hard in 2023. So in 2024, without the impairment, their profit bounced back into positive territory.
Okay, so it's not quite as rosy as it might look at first glance.
Right, exactly. It's important to understand that context,
Yeah.
that there was this exceptional item in the previous year.
Yeah.
So for the listener, this highlights how these big non-cash accounting charges can really distort the picture of a company's profitability.
And then what about some of the other key financial indicators? Adjusted diluted earnings per share, or EPS, was down 3.5% at 362.5 pence.
Yeah.
However, we look at constant exchange rates, it would have actually been up 1.7% at 381.9 pence.
Yeah.
So why this difference?
Yeah, so the main difference here is those fluctuations in currency exchange rates that we talked about.
Right.
So the reported EPS reflects the actual exchange rates that happened during the year, and those can have a big impact on the reported earnings of a multinational company like B8.
Yeah, of course.
So by presenting this adjusted diluted EPS at constant rates, they're basically saying, okay, let's take out the effect of the currency movements and just see how the underlying business performed.
Okay.
And additionally, the sale of the Russia and Belarus businesses that also had a 2% drag on their comparative performance. So the constant currency figure really gives us a better picture of that core business profitability.
Okay. All right. So that's EPS. And then revenue for 2024 was 567 million pounds, which is down 5.2% as reported, but up 1.3% organically at constant rates. And we've kind of touched on some of the drivers of this with the segment performance, but can you just summarize the key factors affecting their overall revenue?
Sure. So that reported decrease was significantly influenced by those unfavorable movements in foreign exchange rates that we talked about, and also the disposal of those businesses in Russia and Belarus.
Right.
But the organic growth at constant rates that really reflects the underlying strength in certain areas, like the modern oral category, and also that positive price mix that they achieved in the combustible segment. So that helped to offset some of those lower volumes in other areas. So basically, divestments and currency headwinds kind of masked some underlying growth that was happening.
Okay. Yeah, that makes sense. And the report also mentions net finance costs. So in 2024, those were 1.1 billion pounds. But that included a 590 million pound net gain from managing their debt. So what were their adjusted net finance costs?
Yeah, so the adjusted net finance costs, which exclude that one-time gain from debt management, were 1.6 billion pounds for 2024. So that adjusted figure really gives you a better sense of their ongoing expenses related to financing their debt.
Okay. And looking at their balance sheet, their gross debt stood at 37 billion pounds at the end of 2024. And the report mentions this ongoing objective of deleveraging. So why is reducing their debt such an important goal for them?
Yeah, deleveraging is a big priority for BAT, and it's part of their dynamic business strategy. And basically, lower levels of debt give them more financial flexibility. They reduce their interest expenses over time, and it just strengthens their overall financial stability. And they also want to maintain a strong investment grade credit rating, and the lower debt burden helps them to do that. So think of it like a household, if you want to reduce your mortgage payments so you have more disposable income.
Right, right. That's a good analogy.
It's the same kind of concept.
Okay. And interestingly, their net asset position for their retirement benefit schemes actually improved to 117 million pounds at the end of 2024, up from 75 million in 2023. So what does this tell us about their long-term obligations?
Yeah, that's a positive sign. It indicates that the funding status of their pension and post-retirement healthcare obligations is in good shape, and that could be due to a number of things like strong investment returns on the assets that are held in those schemes, or changes in the assumptions that they use to calculate those liabilities, or maybe they made some extra contributions to those plans. So a net asset position suggests that the schemes are well funded relative to their expected future payouts, and that's a good thing for the company's long-term financial health.
Yeah, absolutely.
Yeah.
Okay, so to just quickly recap the main drivers behind their overall business performance in 2024, what would you highlight for our listeners?
Okay, so the big profit increase that was primarily driven by the absence of that large U.S. impairment charge that really hit them in 2023. And then the strong growth in the modern oral category, that was definitely a positive contributor that helped to offset declines in some other areas. And the fact that they were able to implement price increases and shift towards those higher value products in the combustible segment that helped to mitigate the impact of those lower sales volumes.
Okay.
And then those divestments, particularly the Russia and Belarus sales, those had a noticeable impact on both their revenue and volume figures.
Right.
And then finally, those fluctuations in foreign exchange rates, they played a big role in the difference between their reported and constant currency financial performance.
Yeah.
Yeah.
Okay, so that's a good summary of the key drivers. Now, let's talk about how Biage plans to deliver value to its shareholders. The report emphasizes a progressive dividend policy. So what does that mean for investors?
Yeah, so a progressive dividend policy means that they aim to increase their dividend payout per share over time, and they have a really solid track record of doing just that. They've had over 25 consecutive years of increasing their dividend per ordinary share.
Wow, that's impressive.
It is, and it really shows their commitment to returning value to their shareholders through those regular and growing cash payments. So for investors who are looking for income, that's something they would definitely consider.
Yeah, for sure. And they also engage in share buyback programs. What's the latest on that front, and how does that benefit shareholders?
Yeah, so in 2024, they completed a share buyback program totaling 700 million pounds, and they've announced a further commitment of 900 million pounds for 2025.
Wow.
And what share buybacks do is they reduce the total number of outstanding shares in the market.
Okay.
And this can have a couple of positive effects for shareholders. So it can potentially increase the earnings per share, and it often boosts the share price because there's less supply. So it's another way for the company to return surplus cash to its investors.
Yeah, that makes sense. And the report points out that they've returned over 27.5 billion pounds to shareholders in the last 5 years through a combination of dividends and share buybacks. So that's a pretty substantial amount.
It's huge. Yeah. And it really underscores their focus on capital allocation, how they're using their money and their commitment to returning value to those investors. And these decisions are carefully overseen by their board of directors. They authorize the latest share buyback program, but they're also keeping a close eye on the company's debt levels. So it's a balancing act.
Right. They're trying to do both.
Exactly.
Okay, so as we kind of look ahead now, how does Bede themselves view their business prospects based on this annual report? What's their overall level of confidence?
They sound pretty confident. They express a strong belief in their ability to generate the financial flexibility that they need to both invest in their ongoing business transformation and continue to deliver those attractive returns to shareholders. And there's a real emphasis on building what they call an exciting winning company. And that really centers on the central role that their new categories are going to play in driving their future growth as they make this transition to a smokeless world. And they also reiterate their commitment to reducing debt and carefully managing those financing costs.
Right, so they're keeping an eye on that.
Absolutely.
Okay. And what about those external factors that we talked about earlier, like the evolving regulatory landscape and the increasing focus on sustainability? How do they see those impacting their future?
They acknowledge that the regulatory environment is a big deal. It's constantly changing and it can have a big impact on their different product categories.
Right.
And they're also very focused on meeting their sustainability commitments and making sure those are integrated into their core business strategy.
Makes sense.
And then finally, they emphasize the importance of risk management. They need to be prepared for things like geopolitical tensions, disruptions in their supply chains, the growing threat of cybersecurity. So those are all things that they're actively monitoring and trying to adapt to.
Yeah, a lot to keep track of.
Okay.
Well, to wrap up our deep dive here, what would you say are the most critical takeaways for our listeners from this look at BAT's 2024 annual report?
So the big picture is this is a company that's in the midst of a big transformation. They're shifting their focus towards these new smokeless product categories while also managing their traditional combustibles business, and their financial performance in 2024 showed a strong recovery in their profit. But that was largely due to that one-time charge that they had in 2023. So you have to keep that in mind.
Right.
They remain committed to rewarding their shareholders through those dividends and share buybacks, but their future success is going to really hinge on the continued growth of those smokeless alternatives and how well they can navigate this increasingly complex regulatory environment.
Makes sense. And on that note, here's a final thought for you to consider, given everything we've talked about, the global trends in tobacco consumption and the increasing emphasis on health and sustainability. How well positioned do you think BAT is for long-term success with this diverse product portfolio and their strategic pivot? What are the key performance indicators that you would be watching now to gauge their progress in this evolving global landscape? Thanks for joining us for this in-depth exploration.
Yeah, great question. Yeah.
All right, that's it for today. See you next time.
Bye.